Hi folks, this is Hyman. I wanted to come to you today and talk to you about volatility in the markets and how it affects currencies, and the currencies that benefit from higher and increasing volatility, and on the flip side, the ones that don't. And this is the VIX, the volatility index. It gauges the volatility in the S&P 500, and as you can see, volatility has been going down all the way through March and possibly arguably April of this year, and it was, it basically weighs upon the yen, and it largely weighed upon the dollar. But then in April sometime, and for sure in May, volatility has picked up, as you can see from it breaking this downtrend line on the VIX. And also starting to set up a higher low than before, possibly even a inverse head and shoulders on the VIX, about to break a neckline. And so, as volatility has been picking up, which currencies has it been good for? It's been good for the Japanese yen. You can see it heading higher here. It's been good for the U.S. dollar. You can see it breaking a downward consolidation right here. And so the defensive currencies do well when volatility spikes, and so conversely, pretty much everything else does not do well in a high volatility environment. So euro, the pound, the Aussie dollar, New Zealand dollar, Canadian dollar, etc., all of those are on the one side that are the ones that are taking on the chin for higher volatility coming, and pretty much only the dollar and the yen on the other side. Now the Swiss franc would be on that other side too, but the Swiss franc is being manipulated by the central bank and basically held in check right now. So that one's on the sidelines. They basically benched that one for now. Now I don't think that they can do that permanently, but for now it's on the sidelines, and the dollar and the yen are the only two that are in play. And so you want to keep an eye on the VIX, because if the VIX cracks about 22 to 2250 on a closing basis, if it closes above that level, this thing is probably going to pop to about 30 or so pretty darn fast. And as that happens, that's going to give a lot of life to the yen and to the dollar. And so, there's going to be a lot of currencies that could be prospered, a lot of currency trades really that would prosper off of being long the dollar and short currency against it. Same thing for the yen. The yen is listed second in really pretty much every situation, and so you would short yen pairs. In other words, you would short a currency against the yen. So you would be, like for instance, let's just give an example of Aussie yen. So you would short the Aussie yen pair in that instance if volatility spikes up and stocks start falling. And so you would be short the Aussie, and you would be long or a buyer of the Japanese yen in that instance. So just know the currencies that prosper from high volatility, and know that while high volatility is bad for most financial assets, stocks and a lot of currencies and a lot of commodities and so forth, just realize that there's always something in the currency game that that prospers no matter what, and the dollar and the yen are the ones that prosper during those times. So thanks so much for watching, and if you'd like to find out more about my service, click on the link below this video. Thanks so much. Bye-bye.